Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and am I excited for today's episode? Now, if you're a recurring guest or viewer, you know that we have these episodes Tuesdays and Thursdays to keep you guys up to track and show you guys how to use market to gain an edge. Well, today we have CPI, that's our inflation data, and because it's such a big report, we're going to be covering it for a special episode. So guys, hit that like and subscribe button because Market in the Morning starts right now. All right, Nawab, good morning, man. How are you?
Yo, what's up, man?
What's going on, man? Long time no see.
Been a while.
Yeah,
It's been too long. This week's been going by a bit too slow. But
yeah, right.
Very exciting data report today. And I don't know if you can see my screen, but I think we got to prepare for it. And this is a big
pull
one.
it up. We got to dive right in.
This is a big one because of everything that's currently going on and how it can potentially shape the outcome of this report. So US CPI, released once a month, right, is now in focus. Last week we had labor market data in focus, then we had more war tensions escalate, and now we're back to looking at the basket of goods and the measurement of inflation. So this shapes Fed's rate cut expectations, signals inflation trend persistence. Historically, it's a volatile mover for FX traders and just overall global asset classes. Risk of reacceleration surprise, right? So we can see the range towards the upside is at a 2.6. So there is a 0.2% expectation that it could go up. Anything above 2.6 is then again a surprise for the markets, right? Anything below 2.3 would be a surprise on the downside, signaling that inflation has decelerated, and that the market would then price in sooner rate cuts than later, right? Otherwise, we would see higher rates for longer at a more surprise or a reading of 2.4. However, this doesn't take away from the overarching theme of what's currently going on in the financial markets. The main the main source of volatility currently is all the war tensions and the de-escalation talks that are going on, and it's a constant back and forth. Markets are really moving headline to headline at the moment, as you even saw yesterday. If I open up oil and we go to look at oil futures real quick, we had a massive headline come out, and we saw oil shoot up from 80 to $86.
Bless
Excuse
you.
me. Thank you. So we saw him shoot up to almost 10% in just 3 minutes due to a headline that had come out. And we'll go through that. But this is just what the overarching theme is. So we're going to watch and see how data comes out and how it gets digested by the markets. That's the main thing, is that if CPI does hold weight, we can potentially see outflows on gold until we go down to a better buy price point where buyers are more comfortable buying in, as the overarching theme is still bullish on gold, right? We are still trending bullish because Hormuz tensions boost safe haven demand, dollar weakness off de-escalation relief, China central buying 16 months of this has already happened, but the main things over here are what's happening. And you can see the headlines that are recently coming out that are also getting linked back to these points that we have out here. So just 12 minutes ago, Iran's Revolutionary Guard says they fired a Thai flagged missile in the Strait of Hormuz. Oh, sorry, a vessel. 3 more vessels hit by projectiles in the Strait of Hormuz, showing merchant ships remain in firing line. Things are still hot on the battlefield, right?
Yep.
And then there's other things that can change this. Hot CPI print could flip hawkish, exactly as we're talking about, is that a reading above 2.5, above 2.6, right? These readings above 2.4 are a more hawkish reading because inflation is hot. That means rates are going to stay higher for longer in order to combat inflation. As you know, the Fed's main goals, two main goals, to have low inflation and maximum employment, right? So if the labor market's under stress and inflation's still a bit high, that's a bit mixed, right? So we will see how this shapes out. But just want to bring the tension that on every asset, even your U.S. equities, you can see that the Strait of Hormuz tensions, Iran attacks are all in focus, and that's what's causing that outflows. If we look at ES, that's what's causing the outflows in the past weeks. We've just seen consistent outflows. This push up is probably going to get faded out, and we'll see sellers jump back into the market. So once we take out these lows, then of course we can start to see a bit more downside on ES and overall Nasdaq as well. So we'll also pay attention to that. But we do have the data coming out in just under 5 minutes. Kevin, is there something you want to go over quick? But I think we did a pretty quick summary of what could potentially happen.
Yeah, absolutely. So I did want to touch on CPI real quick. Just go over the overall trend of CPI, right? We're in markets, we're traders, and we know trends. So looking at CPI with our economy tab on marketedge.ai, we're able to see sort of a downtrend since April 2024, where CPI was all the way at 3.5%. Now it's back down to about 2.4. So we could say since October, it's went from 3 even, 2.7, 2.7, 2.4. So if we are looking for this trend to continue, we could possibly see that continue lower, 2.3, 2.2. Now, like we mentioned yesterday on yesterday's episode of Market in the Morning, though, oil prices being higher is going to impact inflation. Now, how fast is it going to impact inflation? That we don't know until we get the report in about 4 minutes. So hopefully it does give us some insight. Honestly, I'd like to see CPI continue to cool off, especially seeing that the unemployment rate has started to move back higher again. That would help the Fed look to cut rates further. Now, at this point, the markets aren't hanging on the Fed's cuts anymore, right? Last year, the end of the year, everybody was interested, everybody cared. What's the Fed doing? What's the Fed doing? At this point, we're looking at like A 0% chance for March. A 10 right? You see that? A 10% for April. It's not happening anytime soon.
Yeah,
So
the rate cuts have just been priced out. Like the
yeah,
market's losing its focus on him.
exactly. So right now we don't want that's not the first thing on our mind anymore. That used to be top priority for understanding where trend is going. Now it's more about the actual macro tensions, right? The Iran war, what's going on there? We spoke yesterday, we covered how Trump said it seems the war is coming to an end soon. And then today, what's one of the first headlines in the lab mentions is that 3 more missiles were striked, right? So clearly, it's not ending anytime soon. Oil did have that massive dip to the downside, and we sort of joked about it that this was probably just a manipulation back lower before we make our way back towards that 120 again.
Yeah.
So we want to be careful. We want to understand what's really impacting these markets. We got 3 minutes till CPI.
And hey, we could be completely wrong and the war
Yeah,
just gets finished, you know?
yeah,
At that
right. We
point,
don't know.
amazing, amazing. But just looking at how history repeats itself, human nature, things don't end this easily
No.
without a complete domination over what has begun, right?
Yep.
So oil coming back down to 76 we tapped yesterday, all the way from 120. There's a lot of room towards the upside. And since the market's being so hypersensitive, any escalation or any further escalation, troops on the ground, or more conflict between Iran and Israel and U.S. stepping in again, can continue to bring that demand into oil
Exactly,
because the
guys. If you're
supply risks still come up.
yeah. Guys, and make sure if you are trading oil that you either have been trading oil before or you're really, really, really sizing down. We're seeing some insane pivots on oil. I used to trade oil a couple years ago before he announced the tariffs because, in my opinion, when he announced those tariffs, the price action on oil became untradeable. It was very poor uncertainty. We didn't know if it would affect oil to the upside,
Yeah.
the downside. Did a whole lot of nothing.
Excuse me.
At this point, we're seeing oil above $80 for the first time in a couple of years, above $100 for the first time in a few years, and it's just going and going and going. So if you are looking to trade it, I see a nice range between $80 and $100. If we could scale above 105, I would like to see us head towards that 120. And I believe we have CPI in less than a minute now, 30 seconds.
So CPI, main meat and potatoes of this month so far.
Guys, higher or lower? Let us know in the comments. What do you think? 20 seconds till we get it. I would like to see us higher, but well, I'd like
Higher
to
than
see us
what?
lower.
You think it's above 2.5? I think it's 2.5, man. I think
You think
CPI
it's
goes up
2.5?
2.5, even 2.6. I wouldn't be surprised 2.6.
If it's a bluff, it's going to be 2.3. I won't believe it if it's 2.3. But remember, it doesn't matter what we believe. What matters is how the markets take it.
How the markets take it, you're right.
2.4. All right, on
2.4.
track.
On track, right on forecast. This is where I wouldn't
Range.
expect too much volume
Yeah.
or volatility. So I would expect more just general conditions, continue with focus on geopolitical tensions, right? So now that this report's out, now we can go into the charts. Now now we understand that it didn't really mean anything. You look into dollar. Dollar did a push down, push up. That's watch how dollar performs. Gold, absolutely nothing.
Same with the U.S. equities.
Yeah, same with U.S. equities, absolutely nothing. All right, guys. So
Have a
hope
good
you all
day.
have a good day.
Yeah.
That's exactly. More patience is needed on days like this when things
Yep.
just come out on forecasts. There's going to be market movements in the session, but it's going to come once the noise and dust has settled. So even if we go back to the headline, so we see that this report is really what is important. Core CPI, which is excluding energy and food prices, remained the same as well and on forecast. So not much out of this report, right? So let's go over to the headlines and see what we're seeing. Okay.
One thing to point out with this report is that it didn't dip any lower. We've been in a downtrend. We've been trying to move lower. We went from 3% in October all the way to 2.4% last month. Now we're still sitting at that last month. So is oil starting to hold inflation here before it turns around? We never really see an easy reversal where, 2 months we were down, and then the third month, boom, we spiked higher without some type of massive catalyst.
Yeah.
So this could be our slowdown before next month's CPI shows an inflation, shows a higher inflation.
Yeah. Exactly. So, very great points. When it comes to more trade ideas, what I would like to just see on gold is that we did break out above 5,200 over here, right? We got that break above 5,200, but we have seen now a high get created, which is normal. You're not going to continue to these higher prices without getting transactions happening in the market where buyers are taking profit, sellers are jumping in to drive price lower to a better buy area, and then buyers are jumping right back in. Right? This is
Yep.
very normal. These are just an exchange of how orders are done in the markets, and it's always a transaction between buyers and sellers. What I would love to see is either just continuations towards the upside and we get into 5280s, 5275 area, and overall 5300s, because as you know, tensions are still high, right?
Right.
Share Hormuz escalation clashes with de escalation hopes. Anytime there's some hopes, guys, boom, missile goes off. So always keep that in mind that every time you see any de escalation headlines, that few hours later, you'll probably see re escalation. or can right? So it really is just theatrics. They have to, each side is always saying, "Hey, we're trying to work out a deal," and then a few hours later, you see that side just fired off 17 ballistic missiles. So it is theatrics. So you have to keep that in mind as well. Is that although demand is holding strong on safe havens, we can still do something like this where we go a bit down to better buy prices before going before pushing higher. Same with U.S. equities. You see, U.S. equities created a new intraday low at 6,600 on S&P minis, right? Mini futures. So, but we can continue to see that over the past weeks that the escalating tensions has continued to pull money out of US equities, causing this downtrend. Has that downtrend been broken after getting this push towards the upside? It has not. It has been respected. Now, if we see breaks below here, then you can see that something like similar to this price action, where you get these intraday lower highs, right? Whether we go up to here and then go down, you get these intraday lower highs in areas where you can take safe sells against with the trend in this case because of what all the macro factors that are currently in place. So if I go to S&P 500 here, we have mini futures. You can see the same target by 6,700 because of the Strait of Hormuz escalations that are going on. Israel begins attack on Beirut and Iran. 43 minutes ago, headlines: Israeli officials acknowledge no certainty that war on Iran will lead to collapse of its clerical system. So you can see these are just straight tensions that are continuing to build up here. Israeli defense minister says war on Iran will continue without any time limit. Guys, we don't know how long this will go on for.
Wow, that's big right there.
It's a massive one. Just 56 minutes ago, and it ties directly to this bias factor that where Israel begins attack on Beirut and Iran. Right. So this is happening. This is happening in
That
real time, and until something changes, you're not going to see investors pooling their money back into U.S. equities. It makes no sense for them to do it.
that's a really cool update with market, how we have the headlines within the supporting bias tab now, because instead of having to fish through all the high headlines, it's going to divide it, it's going to sort of folder it and put it where it belongs.
Absolutely, and I
Very
think
cool.
it's beautiful because of the real time aspect of it. So if you're like trading NQ, right, and you're watching these high impact headlines come out, you can instantly go down here and it'll say new,
Yeah.
that it just came, it just picked it up. So Mark, what we do great is this real timeness is that we're really adding in and focusing on for our users, where as soon as something happens, you know what it's impacting, what side it's getting weighted on. So you're not left guessing. A lot of what our competitors do is that they give data and then they just leave the user guessing. We're here to assist you guys, right? So just like how we broke this down, that US equities still bearish on the intraday times frames. When we do get these outflows, you can see clear outflows back to lows, create new lows. So that's something that we can continue to look for. Kevin, what are your thoughts
Yeah,
on
no, I'm with you on that. Definitely a bit more of a bearish tilt on equities, especially with all the uncertainty, all of the tensions. There's not much going on to drive optimism into these markets right now. And optimism is what drives markets to the upside. So without that, this could lead to a lot of possibly selling. And when we see selling in the markets, it could lead to panic selling. When we get panic selling is when we get those crazy like 400-point moves on NASDAQ, 100-point moves on ES. So we want to be prepared for that, but we also want to be prepared to possibly take it long. The past couple of days on ES on the intraday level, we have been able to find some buyers. And then the overnight session, we would see the moves to the downside. So I'm waiting for that to flip. I would love to see that flip. CPI gave us a whole lot of nothing, unfortunately. So we're going to have to just trade it from level to level. I would like to see us come back to the previous day's range we had, around 68.32 for some possible short positions on the ES. And again, that's going with the bearish fundamentals that we have. And I would use the previous day high as a stop loss. I really want to make sure we remain below that previous day high, possibly stay within the range, and even look to see. I always like to check the daily time frame, right? Is this a reasonable move? Well, look at the chart right here. No drawings. We've been making lower highs, lower highs, lower highs, and now we're making lower lows and lower lows. Fundamentals are screaming bearish. Technicals are screaming bearish.
Yeah,
so
absolutely.
Definitely going to be looking for some possible shorts today.
Yeah, even I think break of this structure over here with momentum. Let's say we give or take a minor pullback during NYSE Open, we can continue to head down on ES, like fill this at least level to level range over here. And these moves can happen quick. You can see when volatility is really volume and volatility are on one sided, it's very clean plays that we see happening. So the fact that we're rejecting again in the lower time frame, we're rejecting off 6,800 during CPI gives me that confidence that, okay, if we see a break of these lows at 67, 63s, that downside filling this range looks very, very likely, in my opinion.
Yep, looks good. Let's cover gold with markets fundamentals. We got a user. What's up, Gavin? We'll cover that for you real quick on gold. We did it briefly before, but we'll dive more in depth now, give you guys some possible trade setups.
Yeah, so gold is still very bullish on swing trading bias and on day trading bias due to these factors, as we've already gone over. Hormuz tensions boost safe haven demands. You can see the latest headlines that are coming in and impacting and adding weight to this bias over here, this bias factor. Other factors include like China central bank buying for the 16th month in a row. This has already been something that's been going on. So it's not too much in focus. The main focus, again, is the war tensions that are ongoing and continuously developing. So gold, we're looking for a pullback. We talked about it over here that this pullback can extend deeper into 51.25s, 51.20s area, just because gold loves to do those types of liquidation moves. Where it heads down, you get a quick liquidity grab, and then everything holds the same, and then markets continue towards the upside once you see that change in market structure. Because we know that the bias factors are all bullish on gold, that's what we're looking for. That market always moves in waves, so something like this is normal. And then you see more one-sided volatility when more buyers outweigh the number of sellers in the market.
Yep, absolutely. Oh, guys, let's not forget, we have a free Market AI webinar coming up soon, guys.
Right here. So this is why your setups keep failing during news events, is because you don't have access to information that can help guide you during times of uncertainty, during times of where you're left guessing on what this data report means or how does CPI impact the markets. And we broke it down. We broke it down fully. So if you want to understand and know how to trade these types of events or political tensions, join this exclusive webinar. It's going to be very informative. You're going to walk away with a boatload of knowledge that you're going to be able to apply instantly to your trading and absolutely understand and kill it in the markets in such a year where information is king. If you don't have access to information, if you don't know how to digest it and trade with it, it's useless. You'll be left guessing why your setups don't work anymore in these market environments because you won't be able to adapt. And if you can't adapt, then my friend, you're going to be left getting swept by the waves of the ocean.
That's right. That's right. Absolutely. Yo, Gavin, it's our pleasure. Yeah, we have Forex pairs, futures, stocks, everything, man.
Yes, sir.
Yep. Prepare your questions for the webinar. It's going to be great. Absolutely. Very informative.
Yeah. We have special guests. We have Jeev, my co-founder, also going to be running a lot of the educational part of it, and it's going to be a great one. Like, this is something the community is going to absolutely love.
Awesome. Awesome. Good stuff, man. Guys, let us know. Drop some tickers in the chat. Let us know what you trade, what you want to cover. We went over some gold setups. Is there anything else you want to cover on gold?
I think for gold, we're good on gold.
Right? I know. I think so. S&P, we're pretty solid. We'll take a look, one last stab at S&P and NASDAQ as well. You know, it's funny. Silver used to be like the go-to. And then ever since this new war situation, now it's oil, right? We're gonna see tons of those.
The markets are always evolving, right? We were
Yeah.
talking about it yesterday. That's what makes it fun. There's always something else that's going to be in focus.
Yep. Silver still is very, very, very valuable right now. It's $86. But we see that it's in a much more clear range. When we were seeing this trend over here on silver all of last year, it was a consistent move higher, followed by consistent move higher, until we had that massive, what was that, like a 40%, almost 50%, 46% pullback, guys, on silver within a week and a half.
That's nuts, right?
That's insane. Imagine the shorts being squeezed at that point.
That's the thing. It's like the amount of shorts that just got wiped out right there.
Yep. Huge. And now what happens? Volume also dies down. Check this out, guys. We talk about volume moves markets, fundamentals move markets. Well, look at all the volume in this area, and then look at after the short squeeze, look at it die down. It's losing interest. People are not as interested in it anymore. And now if we come over to oil, most likely going to see an enormous amount of volume step in there, right? Look at that.
Wow, massive.
Right?
Massive,
huge.
massive.
I'd love to see this area that we just retraced to around 75. It's like a key psychological point. Break us back higher towards that 98 and even possibly 100.
Yeah.
Something I wanted to mention on gold today, guys, I saw on the daily time frame, was how choppy we still are. Even though yesterday did give us a break of that previous day high, tried breaking the range and closing above it, we're still getting that pattern of red, green, red, green, red, green. Very inconsistent. We want to be extremely careful on that part.
And it makes sense, right? Because look at what's going on. You get these escalating tensions, you get talks of de-escalations, you get escalating tensions, talks of de-escalate. It's just back and forth. So that uncertainty gets reflected in price action. And that's why you see more consolidation, or just gold going up, pushing down, sharp push down, sharp push up. And it kind of causes that consolidation on daily time frame, as Kevin was pointing out.
Yep, exactly. Guys, real good stuff today. USD CAD looks like a bull. We could take a look at that, guys, 100%. And what's great with market, now, guys, I don't trade Forex myself, but market's able to break down the fundamentals so basic and so simply for you that even if you don't trade it, I could come into this and figure it out and tell you exactly what's going on in it. So let's see. USD CAD pinned at 136 as Hormuz attacks, explosions counter global oil reserve releases. So what's supporting the bearish bias here on the daily? Trump signals Iran war ending soon, de-escalation. But we also know that since he announced that, it's been picking back up again. It's been very 50-50. Strait of Hormuz shipping disruptions elevate oil volatility. We know as traders, if we're looking at something like USD CAD, when there's extra volatility in oil, it's going to cause a lot of pressure, usually on equities to the downside. So we'll see that more bullish on the safe havens like the USD. So definitely a 50-50 here on your CAD USD, but leaning a bit more, if anything. I don't know. What are you thinking on this, Nalab?
Yeah. So again, it's like CAD gets impacted because of oil, right? So the focus is directly on oil and oil supply disruption risk. So the more and even look at this, oil on intraday time frame has already flipped, in my opinion, has flipped from those lows from that profit taking, right? You can see that demand coming back into oil, and that's going to impact CAD in the same manner as well. So if we look at even on, I want to bring attention right back to ES. ES is about to react to this level at 67, 63 that we were talking about. Any breaks of this and we get these lows taken out, we can trickle our way down to like 6,700 down here.
Yeah.
Evan, you think that could be
Oh yeah.
clean cut play?
Absolutely. Absolutely.
Yeah.
It's definitely a bit more of a harder read right now because we're not going to get that clean cut. Like, hey, CPI came out higher than expected. Expect this reaction. It stayed right in that range.
Right in that range, yeah. I think give or take any pullbacks, we can get a squeeze towards this downside right here and fill that range. Gold, on the other hand, is just correcting. It's still in that corrective phase. As we talking about, we're waiting for a level like this down here that we can really take advantage of. And if market comes down here, takes out these lows that we've been in since Tuesday during London session, London trading hours, then we can really see potential buyers jump in at any of these price points down here.
Yeah. Yeah. So, guys, equities are looking real nice. Like Nalab mentioned, to the downside here. I'm not even seeing much support on the S&P, the NASDAQ, until on the S&P at least 66.35. Right? That was the last area that we really based out before price gave us that rally, but that rally didn't have much to sustain it, right? We had maybe a couple headlines saying that, oh, the war's ending soon, but we know, and now market makers most likely know at this point that was bluff because we got new headlines saying that the attacks just got stronger. Even Hegseth yesterday saying how yesterday was going to be the biggest attacks ever. I didn't really see that in the news. I don't know about you, but
yeah. I don't even think it happened, right?
Right? I know they were like hyping it up.
That's what I mean. It's just theatrics. A lot of it is just theatrics until you see direct escalations, which gets reflected in price, by the way. So when you do see direct escalations and these types of plays towards the upside, it gets reflected in price immediately. And you're able to see that when things happen on market open, over the weekend, stuff gets reflected in price, right? You get the de-escalations being reflected, but then other times markets are a bit more choppier. They're moving in the direction you want it to, but it's not going to be as quick, clear cut as some of these other plays, right?
Yep, exactly. The S&P, in my opinion, gold, I'd probably try to stay a little bit away from today unless we can get some volume stepping in, right? Give me a good continuation, give me good confirmation. But right now, what we see on the charts is we see range. And we don't want to be the uptight trader or the obnoxious trader that's like, oh no, well, today's the day we break out of it. How do you know that? Are you managing billions of dollars and you're going to pump that right now? So listen to the markets. We're still range bound, so trade the range. Use a volume profile, buy the lows, sell the highs type of deal. But don't be looking for continuation on a day like this without any type of real headline behind it. We were expecting CPI to be that real headline. It was a flop, gave us within range, nothing really expected. Well, it was expected, and that's why we're not getting the momentum or volatility that we do look for. So it's just a matter of how things want to play out and if any big headlines come out.
Exactly. I think it's going to be a bit more of a slower session, but we will get that volatility, like I think post NYSE open.
Yeah.
And see how things set up during that. Until then, it's like observe what's happening. Don't be too attached. Like if we bounce off of here, it's probably temporarily. But if we do get a break of it, I think we could get at least a few points where people can take advantage of from 63 down to like 30s. Exactly.
Absolutely. Yeah, absolutely. And something else, guys, to keep an eye on if you are a trader of U.S. equities, whether that's the NASDAQ or the S&P 500, is you want to keep an eye on the VIX, right? Now, the VIX, we take a look right here, we have been sort of making our way higher. We went as high as $34, $35 for the VIX. That is massive. Now, historically, when the VIX breaks above 20, it gives a 10% return, or in the next 12 months, the S&P is up 90% of the time. So yeah, we're extended here and we're seeing a lot of fear, but they always say in the markets, the best time to buy is when others are fearful. So that doesn't mean that you would want a full port now or try to catch a falling knife, but it means we do want to be aware, and these are usually the best long-term buying opportunities.
Yeah.
As day traders, we see this as intraday volatility, and I would be looking for the VIX to say, okay, can we break our previous day high on the VIX? Because the VIX has an inverse correlation to the S&P and NASDAQ. So if VIX is breaking previous day high, making higher highs, guess where the S&P and NASDAQ should be heading? Lower.
Yeah.
So That's what I'll be looking for today. Really leaning on the VIX, really leaning on these headlines to give me some insight. And without any strong headlines, we're most likely going to have, like Nalab said, a bit more of a slow day.
Absolutely. I think you perfectly covered it right there.
Yeah. Absolutely. Let's see. S&P slides towards 6,700. Mideast attacks escalate ahead of CPI. We run through CPI one more time. CPI was such a dud that we didn't even get like a high impact headline about it. We usually get, if it's non-farm payroll, we'll see when you search it, we'll see like unemployment.
And it'll come up as like a high impact headline.
Yeah, always. These are high impact headlines. These are high impact data events. Well, CPI just was a bit of a dud, came in as expected. That's not a high impact anymore because it's in range.
Yeah, this is one of those reports that they should have just lied about and said inflation dropped just to get so we could get some volatility in the markets, right? Have some fun with it.
Yep.
Fill our dopamine addicted brains with some volatility.
Exactly.
But yeah, it is a pretty standard. But things like this are good because you're able to see, okay, it forecast. Things are going to be ranging. So it's best to just be more patient, wait till the noise and dust to settle, wait for key players to start driving the market, and then execute at the price points that you're waiting for.
Yeah, this is big. We got a few comments I'll touch on in just one moment, but this is pretty big right here. This cargo vessel hit in Strait of Hormuz, what's supporting a bearish bias. The reason I say this is big is because look how recent it is. 41 minutes ago, an hour ago, 3 hours ago. So right now we know that they're actively attacking right now, right? And that means anytime we could get a big headline, we could hear that doo-doo noise from market, and it could be like, the U.S. hits Iran for blah, 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 or the Strait of Hormuz gets attacked or officially closed, not letting anybody out. So be patient, wait for markets to react, and be prepared. The best thing we can do as traders, whether it's a trend day, a range day, an as expected day, is be prepared. If it's the traders that aren't prepared that come into the market every single day and expect the same results, that's the definition of insanity, coming in doing the same thing and expecting different results. We want to know what we're doing. We want to stay patient. We want to be prepared.
Absolutely.
Awesome. Nalab, is there anything you want to touch on before we wrap up today's episode?
That's it.
Awesome, man. Absolutely good one today. But unfortunately, man, CPI is leaving us with a dud, bro.
Yeah, but I think everything else is still status quo. Like still be looking for the same trade ideas that we mentioned. Same biases, same factors, what the main focus is for markets right now. And until that gets resolved, nothing's changing.
Exactly. And guys, don't forget to, with market, it does have your daily bias, your swing trading bias, and it does have, you could hit larger on the chart, and it gives you annotations. Why did we sell off on this candle? Why did we start pumping on this candle? What's our most recent annotation? Okay, Israeli attacks on Beirut/Iran spark oil rally. Okay, that's our most recent, is that there was an attack in Iran. Perfect, great. We know that's going to continue to bring us higher on oil. All right, ladies and gentlemen, make sure you hit that like and subscribe button. That has been Market in the Morning. We appreciate you all for joining us today, and we will see you guys all tomorrow for Thursday's episode.
See ya.
Awesome. Take care, everybody. Have a great day. Trade carefully, and hit that like and subscribe. Peace.